Rohr here with an early, concise highlight on Wednesday, January 7th, 2015. It's currently 7 a.m. U.S. Central Time. It's going to be very concise today because much remains the same as our analysis in Tuesday morning's Global View, and we're only going to be covering the S&P 500 today as an important indication of the risk-on, risk-off mentality. There are quite a few macro factors that affect the markets coming into today and through the day in the U.S. We'll get to those shortly, but the primary influence is likely to be this afternoon's, that's 1 o'clock p.m. U.S. Central Time, this afternoon's release of the minutes of the mid-December FOMC meeting. And we've referenced that before, and we'll be getting back to it shortly in the actual analysis. And that leaves us asking, what does all this mean to the markets? Well, the market activity is very interesting because, as you know from our S&P review in the Global View video opening yesterday, the previous high from back in September around the 2013 area was very important support, and what was obvious was the market was trying to hold it early yesterday but then broke it in the second hour of trading after holding it later on in the day on Monday. Now Monday was interesting, of course, just backtracking a bit, because the higher support that can really still leverage up for an immediate retest of the upper 2000 area is that 2040 to 36 that was also important back in early December. And when it failed there in early December, it headed down into a washout not only below 2000 but below. Another level we had noted was important along with the 2013 September high, and that was the 2085 high from back in July before that reaction into early August. And to revisit that just momentarily, we had the FOMC meeting back on the 17th, and right before the release of the statement and into the press conference, the market was right around the 1985 level, and immediately upon release of the statement pushed up, lo and behold, to 2007 and finished the day challenging 2010 and ultimately, of course, 2013, which there were key highs up toward that area. Even on Janet Yellen's temporarily misspeaking, the market only got back down near 1985. And the reason we're highlighting that, of course, is look how important that is relative to the market holding the top end of the 1985 to what we're calling the 1980 sort of congestion range. And with that, if the market continues to succeed in holding that into and after the FOMC minutes release today, we would suggest it's probably still okay, even though it does need to get back above the 2013 area overall to start pushing back up on a couple of levels,